Okay, Tuesday, 10th of October 2023, we're looking at the yen pairs and potential setups using the M5 Asian range break or liquidity take setups. So this is the yen index in front of us. You'll see that the first point of interest came here with a wick below the Asian range low. Okay, when we get that wick, one of two things can happen. So you can't take a trade yet because you have to wait for the next candle to print this candle. If this candle prints with a close below, then you're looking for the Asian range break. If it closes back inside the Asian range, then you're looking for the Asian range fake to take it up. So technically, this is a good Asian range fake setup. The problem with it, however, is that by the time you wait for this M5 candle to close, price has already moved up here, okay? And you'll see on the GJ, okay, so on the GJ we have exactly the same thing what you'd expect, just the other way around. So we've had the wick above the Asian range high, and then by the time we wait for this M5 close, price is already down here. You're not going to enter here. What you can do is enter a stop order here or a limit order, but it doesn't get taken in, okay? And what happens next, on the next 5-minute candle close, we get something very similar to yesterday. It doesn't take the high. Preferably you want the high of Asia to get taken, but when you have clear fractal points like this is all the liquidity, like, you know, for like 5 or 6 hours worth of liquidity. So all this liquidity got taken, this liquidity got taken, this all got taken on this one candle, and we're closing with a wick to the upside. Fair value gap here that got closed. So now we're looking for a potential setup the other way. Okay, so what you have to do is so you wait for 5 minutes to see how the next candle closes, which is here, and there's nothing here in this candle to put us off looking for yen sells. Okay, so at the close of the 620, you're definitely looking for yen sells. 620 close, so that puts us 615, 620. So look what's just happened. We've had the Asian high taken. The Asian low is just, I don't think it's taken. It's a double bottom, okay, which is a kind of frustrating and a bit misleading, because if your hard rule is take the high, take the low, then go, you'd have missed out on this. But you don't want to ignore what's happening here. 1 bit of liquidity, 2 bits of liquidity, 3 different fractals. All of this liquidity from the majority of the Asian session has been taken out. So this, as soon as this closes, you're justified in taking a long. Now the problem is, where do you put your stop on this? You could go to a 1 minute, but just to keep it simple, so you enter at the open, or two tick back pressure, it's up to you. Open's probably best. You get 20 pip stop, so close below the lows, and you easily end up with a 3-to-1 on that. Okay, let's look at the EJ to see if we had a similar. We did have a similar setup. The only difference is, look, we had a close above. So we had a close above on the EJ. Okay, so it's 6 o'clock. If you're looking at this first, you'd be wanting to see the yen close below its Asian range. Okay, 6 o'clock. And because it hasn't, that would hopefully keep you out of the trade. You know, the problem is sometimes if you use the yen index as your primary indicator confirmation, you miss good trades. But conversely, so for example today, this would have kept you out going long. Okay, if you did go long, you know, 15 pip stop below POC, you would have lost that trade. Okay, but coming back to this sweep of highs, again, we get the sweep of lows. 1, 2, 3 lows are clearly taking out. So you could go long on here, but between the two of them, you want to measure like where are you going to put your stop. If it's going to be below the Asian or halfway of this wick, that is up to you. But the basic setup is solid on both the GJ and the EJ. AJ on the Tuesday, it's kind of interesting because we didn't have the take of the highs like we did on the GJ and the EJ. Okay, so AJ was down here, so you've got all this liquidity still resting here. The Asian lows do get taken. Okay, the only problem with this is if you were looking at this in real time, you would at least want to see this like New York PM session get taken out, and it didn't. It makes a double bottom and price goes from there. So supposing you missed those trades at the time, just as an aside, if you do this, okay, you don't get a deep discount, but you definitely get below the 50. So for example, this makes like a minor fractal on an M5. As soon as price goes below there and closes above, you could enter from there with your stop like halfway down here, 10 pip stop, and that works. So this is happening at 7:15. Okay, so 7:15 close. What's happening on the yen? So in order for us to want to be long on the AJ, we still want to be confirming short on the yen, and you'll see price is here at 7:15. There's no reason to think that price is about to reverse up at 7:15. So even if you missed these trades at the beginning, or you didn't take them because you thought the stop loss would have to be too far, you could have got a decent pullback on the AJ, whereas the GJ nor the EJ provided that pullback. Okay, so to recap here, the basic learning point is that although we liked it, like a perfect Judas swing would be Asian low taken, then Asian high taken, then for it to move down. This is the same principle and it works just as well because you have clear liquidity points within the session that are taken. You can see that both on the index as well as on the individual pairs. Okay, another thing worth pointing out quickly is that, so let's say you want to take a trade, but you can't decide whether the GJ or the EJ is better. It's basically the same trade. They've taken out 3 bits of liquidity. This one has come down further in relation to its Asian low, but hasn't quite taken it. This one hasn't quite taken it, but it's still taken out 3 bits of liquidity. So they're neck and neck. So what you can do in that instance, you want to see which of the cross currencies, i.e. the euro or the pound, is behaving stronger at the time. So you can look at the aggregates. So this is 6 o'clock. You'll see that the euro aggregate has broken its Asian high, which is a good sign. That supports your thesis for wanting to go long the euro. And then at 6:20 it's come down here into this order block. So it might be a bit confusing, but if you just stick with the idea that we've taken the high and like it hasn't taken any significant volume, like even I'm not going to zoom out on a 1 hour, but even on the M5 you'll see, look, that wick didn't take any liquidity. So all in all, you know, you could even wait for this engulfer to form at 625, then enter there. So the euro looks good for a long, and the pound, so that's the Asian high, it's also broken its Asian high. It's come down further, so it's come down to its midpoint, 615, 620 close. We've got a strong inside close. So there isn't much in it. They both look good for longs. You know, it's up to your discretion. Possibly take the euro just based on this.